Hi, in this video I'm going to be briefly explaining support and resistance levels and why it's so important to learn how to identify them. We are looking at the Matic USDT trading pair, and I chose this one because there's been a lot of volatility and it's going to be easy for you to understand this. So let's go ahead and start with support. As you should know, support is helping keeping something up, right? So if it's supporting it, it means where price bounces off of and goes up. Resistance is the opposite. Resistance is the top where it hits and gets rejected. So support keeps it up, resistance it keeps it down. When you're identifying a support and resistance level, you don't do it by the specific price. For instance, if I put this as the support level, it doesn't mean it's specifically 0.01206 of a cent. It means it's this area right here where it bounces off of. And the reason I drew this line is because, like I said, it's where it bounces off of. So as you can see, this candlestick right here bounced, bounced, these bounced right there, bounced, and all of these bounced right here. So that's where we can draw a support level, because drawing trend lines and support and resistance lines is literally just connecting points to a line. And support and resistance levels are horizontal. They run side to side. Trend lines run with price action, and I'll explain that in another video. So we can put this right here. Also, a good thing to notice when doing support or resistance levels is that if something is a resistance level and it gets broken through, it usually becomes support unless the price keeps going up, and then there'll be support even higher. So this was resistance right here, and so it works out perfectly that we can draw our support line through here. So we know that if the price was to break this support, instead of launching off right here, if it was to break down here, then this level right here would most likely become resistance, because if it's broken, it flips to the other side. If resistance is broken, it usually becomes support. If support is broken, it can become resistance. That's how it works. And it's all psychological levels. People set up big buy orders or sell orders at these prices to keep price level or below or above that price, and to help, it's market making, helps keep it up. Now a resistance level is, like I said, it's at the top. So we can put our resistance level right here, because remember, we're connecting points on a line. So it hit right here, it hit right here, and this was very close to where it hit. If you notice, it comes through here and stays above the support level, so it's pretty strong. And when it got really close and looks like it was almost going to break it, it bounced hard and came up. Finally, when it went to the resistance level and it touched it, got rejected just a little bit, and then it flew straight through it. So that's usually what happens if the volume upticks and there's a lot of volume right here to push the price through, and it finally breaks through. It's usually going to fly through. The same thing with here. We can draw a support level right through here, because support and resistance levels, trends, all that are connecting the most points that you can on the line. So as we can see, this connects a lot right here, and it bounced from this exact level. Here's where we had candlesticks that were wicking, and bounced, got rejected off there, bounced, rejected, 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 finally came support right here because it flipped, and then it flew off of there. The price took off, and then the reason it fell to right here is because this is where support was. And so it just about touched that line, and it flew straight back up again. Now we can draw resistance levels right here to predict future price movement. So if the price goes up, we can predict that it's going to hit here before it gets rejected and falls down a little bit. It may go through it, but we can help predict and place our buys and sells accordingly. So right here, the best time to buy is, remember this, buy low, sell high. What that means is buy into weakness, which means buy into support when the price is going down, getting closer, and you want to sell in the strength. So sell when you get up near resistance. The closer you get, the more likely it is to get rejected, unless, like I said, it flies through, and then that becomes support again. And so you don't want to buy up into here because it's going to fall and then sell down here. That's the complete opposite of what you want to do. You want to buy down here in support, and then sell up into resistance. And rinse, repeat. It's really that simple. That is support and resistance levels. I hope I covered as much as I could. I hope you understand that. It's really simple. Remember, support and resistance. Support is below, keeps it up. Resistance is above, keeps the price down. And market makers, people in the market, put orders on the boats at those levels to keep the price above or below them. And then when they're broken, it can become the inverse, and support can become resistance, or resistance can become support. Now, none of this is the way it is, and this is the way it always will be. Like I said, it can fly through it, and then it can come right back down. What we're doing when we're trading and we're placing buys and sells is we're trying to help ourselves predict future price movement. It's not about calling it perfectly. It's about having a plan, trying to predict the future. Nobody's Nostradamus. We can't get it perfect every single time, but you always must be ready to pivot. So if something happens and you sell right here into the resistance, and then it goes through, maybe it's time to rebuy and sell higher once it gets up. And I'll teach you in the trading course, more in-depth course than just this investing one right here, in that I'll teach you how to read order books and price movement and indicators and all that stuff, how to watch Bitcoin, all that good stuff. But for right now, remember, buy low, sell high. Buy near support, sell near resistance. If you follow this basic rule, you'll do good in these markets. Don't get ahead of yourself. Don't chase pumps. Don't buy at resistance. Don't sell down at support. That's not the smart thing to do. Now, if support breaks and you have a position, if this fell below here, you might want to exit it. Go ahead and cut your losses and get out of it, and wait for it to get to another support level, which would be down here, because remember, where the points connect, maybe rebuy and then try to make your money back. Remember, it's levels. It's not specific prices, and you always want to buy near support, sell near resistance, and resist FOMO, resist fear of missing out, resist chasing pumps, and resist bag holding as well. If you can master yourself, you can master this technique, and you can become successful in these markets. Support and resistance, it's basic, it's elementary, it's the foundations of successful trading and investing. And I hope that was easy to digest, and if you have any questions, I'm here for you. Just DM me, reach out to me on social media, whatever. Really easy to understand, really simple stuff, guys. You got this.